We typically look to trusted intermediaries, such as governments, clearinghouses, and many other exchanges. And there is an overlay of functions like custody, clearing, and corporate trust that goes into reconciliation, confirmation, identity management, and many other steps that create a long trail of paper and a long paper trail and whatever has happened. And all of these things had friction in form of time and money. And what blockchain will bring is going to offer a more effective way to handle a whole range of financial transactions, which with use cases in payment, in derivatives, in settlement, securities, trade finance, syndicated lending. And I would say that a well-designed blockchain can give businesses most of what they want from a new tool. Like I mentioned, it can cut out intermediaries. It's going to reduce cost. It's going to increase speed and reach, and even offer transparency, security, traceability, and most importantly, blockchain can build trust. Um, However, there are a number of logical reasons why these organizations may have difficulty adapting to blockchain applications. And really, by understanding and addressing this content, we can have a wider acceptance of blockchain, the use of blockchain. And I'll be breaking down these challenges down the challenges of trust, and we can really look at three reasons why we have struggled to trust the use of this technology. First, I'll say that blockchain is relatively new. I mean, the first implementation is less than a decade old, and most of the applications of blockchain are far younger than that. In contrast, the systems that most of all these big companies, all these financial services companies rely on, have gone through testing of so many decades, and they have they have specific guidance and principle, which gives these people comfort over time. And financial services organization may not yet have the same expertise or guidance to be comfortable with a system that puts trust in what they will call cryptographic algorithms. And of course, learning takes time, so you wouldn't blame them. Second, the controls are different when it comes to blockchain, because the technology is new. It requires a new way of thinking about controls. So you have companies asking you difficult questions like who controls blockchain, who gets access, where are the servers of blockchain, what physical and digital controls exist, who monitors activities, and a lot of all these questions. So it's not like the regular type of control that we are used to, being financial services companies. And technical expertise of this is very rare. I mean, I read a survey where 6% of financial services executives were asked that why their organizations have not yet developed necessary blockchain skills. And few people feel there are very few people with relevant experiences. They mentioned that there are few people with relevant experiences in their organizations that's on blockchain, and there's not enough expertise to provide any sort of that assurance that they require around technology and associated work. So I haven't spoken about these challenges that blockchain has faced over time. I would like to speak about some recommendations. I mean, if a technology is to gain wide acceptance in business community, we the promoters, we need to acknowledge and address some of all these skeptics. Blockchain is new, yes, but it has matured rapidly. I mean, you say the controls are different, but they can be designed and managed. Technical expertise you say is rare, but it can be found, especially in organizations that if you have made commitment to this technology, you will definitely find expertise. And I would say that what will get blockchain to gain broader acceptance is a clear way to show that some of all these concerns that these people have raised have been addressed. Um, some of these things are that we expect you, as a business, to evaluate the business use case and the need for and the needs for all stakeholders. We have to assess the underlying cryptography, including how private keys are managed and how the blockchain engine security is maintained. I mean, this would include reviewing the consensus mechanism being used to be clear about when a record should be added on blockchain. And we also have to examine the specific network that has been set up, how the system reports are generated, and how the controls that guide the network's operations are worked out. We also have to keep in mind that there is no such thing as a standard blockchain. There are many blockchain systems, and each of the implementations are unique. We also have to there has to be perform we have to perform ongoing we have to perform reviews to be able to assess the effect of any systemic challenges. And so I would like to say in closing, I don't want to take too much of our time. The modern financial services industry, especially in Africa, has evolved over time, and it has evolved to include a range of complex network of participants and processes. Technology shifts are now making it possible for us to rethink which relationships actually make sense and which should we continue, and whether they are really necessary. So traditionally, firms on each side of various business transactions depend on the overlay of controls to be sure that everything is done right. And there is also selective after the fact testing to be sure that controls have they actually work as intended. So blockchain could change all of this by reducing the friction of the intermediate processes. It's going to test everything in real time, rather than testing sometimes later, which our current technologies are giving us. And we also expect that the acceptance of blockchain by organizations will play a key part in helping the technology transition from just casual experimentation and hype to broad acceptance. And as for the once upon in a time blockchain stories, perhaps I'm saying that they could become an happily ever after story. Thank you very much. So you can get in touch with me. I'm Olumi Fabanwo on LinkedIn. This is my phone number and my email address. Thank you so much for having me. Thank you, Stanislava, judges. Good to see you, Senat. I would like to connect with every other person. Thank you very much.
Okay. Thank you, Mr. Fabono. You have been very interested by your speech. Before giving the floor to the other panelists, I have a question. You know that the technological infrastructure of commercial bank is very heavy, and the commercial bank have a tradition of conservative strategy, conservative environment. So how do you think that commercial banks could accept to migrate their business model to the blockchain business model one?
Your microphone is mute.
Okay, so as an experience, I was mentioning to a few of my senior colleagues about the advantages and the benefits of blockchain to banking, and I wouldn't blame them. They've been quite rigid, and they had mentioned that the technology is new. But then I made them to understand that if you look at, I brought out so many applications of technology, and even recently I spoke about the vaccines and how some of the vaccines, the COVID vaccines, have employed blockchain technology in monitoring where the vaccines are, how they are produced, and the dispersing of the vaccines. And I made them to understand that the technology is rapidly growing. I mean, we have to come to understand. We all have to sit down. We have to set up a forum as big organizations to say, okay, can somebody speak about this thing? Let us understand, what will this technology bring to us? So the first thing is actually sitting in a forum. We can't just keep saying that, oh, we don't like it. It has to do with blockchain. It has to do with Bitcoin. It has to do with cryptocurrency. You have to accept the fact that the technology is here to stay, and the technology is robust, and it has so many advantages that it can give you as a bank, as a commercial bank. So I think first we have to sit down and speak about this, the challenges, and how this can be mitigated against all the risks that are inherent in it. And I mean, I've been speaking to a few people in the industry, and we've been seeing positive changes because we have a lot of foundations and a lot of companies, a lot of fintechs that have started making use of this technology. So it's obvious that that is the way to go. I mean, is the way forward. So why not just let's sit down and discuss it? Let's see how we can impute it into our systems and the advantages that we can get from it.
Yes, I think also that what is clear is that for the general public is confusing blockchain and Bitcoin.
Exactly.
The general public does not understand that Bitcoin is a consequence of blockchain. Yeah. Yes, an application of blockchain, and that you can apply blockchain in other different aspects of the commercial activities, so that when we succeed to reach that level of comprehension of the blockchain technology, maybe there will the awareness of the benefits of that technology will increase in Africa. Okay, so thank you very much, Mr. Fabono.
Thank you, George.
Okay, I will continue with the second panelist, who is Mr. Sadat Bhat. As I have told you earlier, Mr. Sadat Bhat is the blockchain SME for IBM in Thailand. And today he will discuss with us of the way by which blockchain technology help people and population to get a better financial inclusion. So, Mr. Sadat Bhat, you have the floor.
Thank you. Thank you, George. And Olubumi, you had a great start to the panel. It has put up a great momentum for the discussion on how blockchain can bring in relevant changes in the way people operate, and what are the different use cases and the value propositions which specifically it offers. As George already mentioned, that my subject is today on what blockchain can do in payments, B2B payments, and how it in turn directly impacts the financial inclusion for the country at whole. Before we jump into that, probably I'll just get my screen up also. I hope my screen is visible. Yep. So as I mentioned, let me first introduce myself. George already did that. I work with IBM. I work with IBM Thailand. I specifically take care of their blockchain operations in Thailand. And I have been here since 1.5 years now in Thailand. And before that, I had been working for about a year in India, and before that I was working for about 1.5 to 2 years in Uganda with my own startup in blockchain. I specifically have been in blockchain for about last 4 or 5 years, and as Olubumi mentioned, I have been exploring the idea of how blockchain can best give the value across different use cases. The one best use case that we found that I explored and have been working on is around the payments. And when we say payments, how the payments specifically between the two corporates, and that corporates can be at any level, that corporates can toll down to become a very small, medium-sized enterprises, to becoming a huge corporate, to how they can interact and have a better payments mechanisms between themselves. A low-cost payments mechanism, a more faster payments mechanism is something which blockchain very readily offers. And probably that's the first topic that I want to discuss, and want to also show that how that can at the end lead to a very huge amount of financial inclusions as a subject also. So if I start, let me take a moment or probably a step back to discuss what are the problems probably or complexities probably the payments payments and money flow in total has today in current economy. So in the current economy, when we deal with the payments deals itself with a large number of topics that I have mentioned on the left, that can result right from the risk management, from the KYC, the fraud monitoring, the foreign exchange, pricing and billing, accounting and reporting, the extent of different topics that a bank has to look forward as a central party of trust today between when it executes a payment, any kind of payment between any two enterprises in a country or between two different countries, are pretty huge. And that results us into two major problems. The one that exists is a very complex system to operate in. Second, there is a very the complex system results into a larger price point that you pay for the payments to get executed. And so it's specifically, even if I have to move money from my pocket A to my pocket B as a same enterprise, even in such situation, the cost that my pockets bear is larger, and which should not happen. And that exactly exists because, again, I refer to what Olubumi mentioned earlier, is having a central party. Though even in such situation, it being a very trusted central party, but it's a very costly central party, a complex system-based central party. And that's exactly what I want to show, that how the blockchain can disrupt it, develop it, and can also support it, and can be implemented really easy. Need not be a very complex implementation to happen. And while I'm explaining this, probably I will also take a couple of seconds to explain what we have also done and achieved in Thailand in this state and case. So the current payments systems, how they work is very complex. When I say it's complex, it starts with a payments initiation where you deal with the multiple sets of systems. Today you may be dealing with the SWIFT systems that are common among this multiple banks, or you may be dealing with the bank's own ERP systems or the core banking systems, or their own online app, or their own mobile banking apps, or their applications that are specific to their branches. When you deal with behind the scenes, you will also have to manage your payments orders or the payments ordering that you have to do. And when you are doing the payment ordering, there needs to be a very, very robust or a very strong system that of how the workflow for the payments is managed, how the exceptions are managed, how the messaging is managed between multiple parties when the payments are happening. And the most important part is the payment gateways that you look forward for today, right? We may be having multiple payment gateways that we may be looking towards. There can be Visa, MasterCard, SWIFT, or any other payment gateways that is available or being provided by the bank for making any international payments. All around this, the point is this price. What is the price that we are paying around all this? It's a significant price, and that significant price can range as high up to 15% or more than that. When the international payments or international transfers are complex between two enterprises themselves. And this primarily results into not making possible growth of the enterprises and them not getting included in the larger payments ecosystem or larger payment system. And that's where we want to bring in a more connected, more system driven trust mechanics, and not central party driven trust mechanics. So let's go ahead and see that how probably blockchain actually brings in a trust for this mechanics, right? So as Olubumi mentioned earlier, blockchain is a trust tool or is a trust engine. And when it brings in the trust engine, it builds the most important part of it is the provenance. It builds in a provenance of the transactions that moves naturally between the multiple parties. So if you have seen the last slide, I mentioned most important point is how the flow of the payments happens between the parties and how you maintain the messaging between them. uh, the the most important effort exists there. And from the blockchain's technology standpoint, which we are seeing here and has been discussed earlier, the provenance or the trail of the transaction being most maintained in a most natural way is something that blockchain provides. And while it is providing the provenance, it's just not providing the provenance, it's also providing an immutable nature to that provenance, which can be easily tracked, located, checked by anyone who is in the network. And keeping this concept into picture or this concept into mind, um, let's probably go to the next slide on how I think is the blockchain going to make a difference in the payments. So point one, the blockchain can specifically make a difference in the payments or can bring in a major difference in how the payments work between the enterprises, and does go on to bring inclusion of different, even the small set of enterprises into the mainstream banking and the payments network, is by first providing a complete audit trail and a very easy mechanics of the audit trail. That is the first point that I say that I will say is where the trust is naturally established. The second point that I would call out, where blockchain would bring in a relevant, significant change or a significant impact, is giving a very simple model of a trusted distributed network to operate. So if I simply say, there is an existing network of the banks and the trade participants where you can go ahead and participate, directly register yourself, and do not need to go ahead through a complex mechanics of onboarding yourself to a bank and then going ahead to making transactions with the different bank and establishing trust with them and going ahead with your KYC with the multiple banks. No need of doing that anymore, because once you do it in one network, that is published for everybody in the same network. So it gives a simple model for managing different data in reference to you. You need not produce that data again and again and again for getting yourself included in the ecosystem or the network. The third place and the most important place where I find where I find that blockchain can have a significant value proposition in the payments, or the B2B payments, or the business to business payments, or enterprise to enterprise payments, as so what we call, is it is very hugely scalable. The networks like the open source networks like the Ethereum or the much larger networks today can make possible as high number of entities to be participant in one network as possible. And that makes a large pool of participants coming together simpler or possible. And that's exactly why I will call it as, or why I would call it as, a payments revolution that can exist, and a natural financial inclusion for smaller medium enterprises into the main payments mainstream. Now, once we have understood that what is the value points or how these value points would work amongst the B2B in a payments network, let's really go ahead and see that how the payments actually work, or how the payments would actually work in a payment situation, right? So if, say for example, there is an enterprise, if there are two banks in two different countries, one is in United States and one is in South Africa, and there has to be a payments movement that has to happen from the United States to the South Africa, then And let's take one example where there is entity number one, Acme Computers, who wants to send money from United States to say, for example, any entity in South Africa. Then say Nakamoto. Then in such situation, the first thing would happen is the identification of both the parties. If you are part of one common blockchain network, the identification need not happen again for you. It will, once done when you are joining the network, would naturally happen, resulting you into not undertaking the identification again when you are doing a payments exercise. So the digital identity would naturally be done for you when you are part of this network. So then let's take an example where the Acme Computers wants to pay South African rands about 100,000, and it is transferring it from its bank to the South African bank. Now it need not go through any intermediary process of SWIFT or any payment gateway anymore. It is part of an existing network and execute the transaction through its bank naturally without paying any fee in their US dollars, without having any transaction fees in their US dollars. That results into you not spending any amount, or probably very, very small amount, when you are doing a payments transfer, which today, if I would have been a company who is sitting in United States and want to transfer 100,000 South African rands to South Africa, to my customer or to my third party in South Africa, it would have taken me a huge cost in either ways, which now I can do it simply with the same bank by becoming party to a larger blockchain network where all are participants together. This results into the foreign exchange network. There will be the network rules for the foreign exchange to get executed. And once that is done, the settlement gets executed. And once the settlement gets executed, once the settlement gets executed, the money or the South African rands directly goes to the bank account of my third party Nakamoto. What did this achieve as a value proposition really is, you have removed a lot of headache in reference to you finding different gateways and then making your payments, different networks and different banks and then making your payments, identifying yourself. All this hassles is already removed, but it also removes the significant transaction fees that you would have had to pay. This resulting into you not needing to pay anything when the money is moving from you to your customer, you to your own pocket, because it's your money. Why should I pay to a middleman for just transferring or moving my money from one place to another? So this is probably a very quick, short example on what the P2B payments can look like. What it does from a financial inclusion standpoint is, even a smaller enterprises or a medium small enterprise or a very, very small enterprise can now get into a global transactions very easily and can come down into the payments and banks mainstream without getting into the complexities of the transactions. Now, how that really will get executed, or how the systems will really look like for the one who are in the room and probably a little bit more technical, a little bit more interested from the technical acumen standpoint, we have one more slide where I will quickly take you for the next 5 minutes on how the systems will really work or really interact in a blockchain-based ecosystem. So let's take again the same example as we had earlier. We have a buyer, we have a supplier. We have a buyer's bank, we have a supplier's bank, right? If there is a payment that a buyer has, if there is a payment that a buyer has to do to the supplier, how this will exactly work is, the buyer who is part of a trade infrastructure will just go ahead and trigger a payment. He has to do nothing apart from just doing the point number one, is to just trigger a payment. Once the payment is triggered, the infrastructure or the network will go ahead and verify the supplier's details in the network without the buyer needing to do it again, or without the buyer need to pay the banks to do it for themselves. It will just be done by the network itself. once once the network identifies the supplier, the payment instruction would be executed from the buyer's bank, and the buyer would reconfirm the payment with the buyer's bank. Once the payment is reconfirmed, once the payment is reconfirmed, the payment will get processed and the transaction will get executed to the supplier's bank. Once the payment reaches the supplier's bank, the network will credit the payment to the supplier's network, will identify the buyer and credit the amount to the supplier's network, supplier's bank. The bankers need not do it. The supplier need not do it. The network will do it for them itself. And once this is done, there can be a continuous record of payments, transaction, identity of people, and the register of it naturally maintained in the system. What this achieves really is it streamlines the entire payments mechanics, makes the trade participants to give a complete trail of payment, thereby also making them easy to participate in the payments in the banking network, rather than them going ahead to have a very complex system of complex structure of systems to interact with. And this is where I say that blockchain can bring a huge difference into the way the payments, and from the payments, the financial inclusion can work. This is something which we have very much achieved in Thailand. What we call here in Thailand as Tongfa Pracharats, or what also we mentioned as a very small, medium-sized enterprises who wants to get into a larger financial transactions but cannot get into the payments mainstream, have gotten into one common network of blockchain that we have implemented with the state banks in Thailand. And roughly more than 22 banks and 70,000 SMEs are already using it. So that's a nutshell in what my discussion was all about. It was great to speak here, and would give the mic back to George, and probably you can get me the questions.
Okay, thank you very much, Mr. Sanatbat. Your expose has been very enriching, considering the impact of the blockchain on the financial transactions. And but I have some question for you.
Yes.
So, why is blockchain so important for emerging economies? You know that emerging economies seems to be fragile compared to the Western economies, and in the conscience of people, decentralized systems is related to instability. So how can we help people to understand that maybe decentralized economy is more stable than centralized economy?
I get your question, and it's a very good question, and probably I'll answer it not from my experience standpoint, but I'll answer it from what I have heard from Thailand's Bank of Thailand official standpoint. I mean, and this is exact statements from one of the leading bodies in Thailand. So let me answer that, which comes directly from an emerging economy and what their thought process is, right? So the point number one we need to understand and separate two things out is the technology that is behind this decentralized way of functioning and the concept itself. Now, in the emerging economies, most of the emerging economies in their digital transformation are at, if I put a number line, most of the emerging economies are right either in -1 or -2. Whereas probably emerged economies or the developed or the Western economies probably are at 1 or 2. Now, what blockchain really offers is how an economy can come together as how an economy can come together as one network, one ecosystem, and build infrastructure over it. let's keep the technology away and the blockchain's readiness a little bit away. What are the different platforms available, whether they're technically equipped or not? Let's keep that away for a minute. Let's understand this concept, that what blockchain is proposing as an idea is that if you want to propel in the digital transformation, you should come together as one network. And if you come together as one network, probably the infrastructure that you will set up would be a solid infrastructure, would be a strong infrastructure. And how can you do that? Is by having the strong pillars of the ecosystems, the bank of the central bank, the key financial banks, the financial institutions, probably the key companies in the emerging economies come together to put up one network and one good use case. If something of this nature comes up, and then we start getting into the idea of whether the technology is equipped or not, it will make more sense. The sense is simple. The more together you will build a network, and more standardized a network and the technology for using it would be, the more faster you will function and achieve a transformation or achieve anything for that matter, right? So,
okay, thank you very much, Mr. Salant Bhatt.
Yes.
So I will thank you for your presentation and for your enlightenment. So I will move to the third panelist, which is who is Mr. Charles Dossi. I have stated earlier, Mr. Charles Dossi is the director of Consensus in Hong Kong. And we know that Consensus is a leading blockchain engineering company. Mr. Charles Dossi has over 15 years of professional experience in the private sector. And he will share with us his experience in terms of payment industry and the innovation related to that domain. So, Mr. Charles Dossi, you have the floor.
Thank you very much, George. Thank you very much for having me. I'm really excited today to join this conversation today and this event. We at Consensus are building the third generation of the internet, what we call the Web3. And if we want to look at the history of the internet, the first generation was really the internet of content, where people were able to essentially download some web pages and read some web pages. The second generation of internet was all about social media, and the third generation of internet, which we call also Web3, is the internet of value. And the internet of value is essentially powered by the blockchain, and it allows direct connectivity without any intermediaries between the users of the internet. And this can be for multiple type of usage. It could be for commerce, it could be for social media, but of new generations, as well as content distributions. Consensus is very active in the Ethereum space. Ethereum is the largest smart contract blockchain globally, with more than 350 different developers building every day some applications such as decentralized finance, NFTs, which are a very hot topic right now, but also enterprise solutions. And over the past 5 years of existence of the company, we've been growing with the ecosystem, and we have to acknowledge this ecosystem is still very young. We are still building the protocol. We are still building tools for the developers and enterprises to join and build on this ecosystem. And the company is now focusing much more on products in order to really enable all these different developers to join and build this new value proposition. And I want to take also a minute to highlight the growth at exponential rate of what we call CBDCs, central bank digital currencies, which are essentially money issued by central banks, but using some new kind of rails. And these new rails are blockchain based, and they enable the central banks to power their economy with digitally native money. And if you think about it, when the central bank of any country is starting to use money in a new way, it has a very deep impact on the life of the citizens, a deep impact on the life of the financial industry, as well as the SME sector, and all the value chain, starting from money, which is at the core of every country, gets impacted by this new technology. So CBDCs are being experimented right now by a large number of central banks. Some research from BIS mentioned that 80% of the central banks today are doing research and implementation of CBDCs. And this will have a very big impact on any economies, should they be in Europe, Asia, or Africa. And what it means is that with this digitally native money coming into the end of the entrepreneur, the enterprise, we should expect a lot more transparency and a lot more efficiency in the overall systems. And one feature which will trigger a migration from the old legacy system of finance to this new CBDC-powered systems will be the concept of programmable money. And programmable money is possible thanks to the blockchain technologies, and CBDCs are really grabbing this technology to bring extra value to this ecosystem. So one way some governments are using CBDCs is to issue government bonds, for example, directly to the citizens. So instead of having your commercial bank buying the government bonds and giving you interest on your saving account, the government are trying to bring directly to the citizens these government bonds to enable citizens to receive directly without any intermediaries the bond coupons. So it brings higher saving accounts for these industries. As mentioned earlier in the talk, there is application in multiple fronts when it comes to blockchain. Should it be in supply chain or in healthcare? But as per today, most of the activity is happening around the financial industry, and that's a good thing because it impacts a very large number of people, and that's really an exciting part of the technology. We at Consensus also are spending a lot of time to grow and develop developers from wherever they are, and that's through some education. And with this new technology coming, if you want this new technology to be impactful, you want to make sure that it reach many different people, should they be enterprise or simple developers. And I'd like to invite all the participants in this event to train themselves and not to read about blockchain only, but to try to add these skills to their resumes and to their toolbox of knowledge. And Consensus is offering free of charge trainings on Coursera. So you can go to coursera.org and look for the Consensus class, and you will find a free class which will give you the 101 on blockchain. So if you are a developer, if you are a technologist, and you want to make sure you are well equipped to understand and benefit from this blockchain trend coming into all our industries, please join this class. It's free of charge. You only have to pay if you want the final diploma, but the classes can be attended free of charge. And more than 40,000 developers globally have attended this class, and this is the magic of the blockchain ecosystem. That's why I'm very excited about working in this industry for more than 2 years now. Is that the paradigm is switching a little bit. We used to see the technology center of the world being in the Silicon Valley, and as an engineer, you would have more luck and maybe more chance to have a great career if you can be physically in Silicon Valley. But nowadays, with the technologies and the blockchain industry revolution, the decentralized internet and the Web3 don't care where you're from, and it gives a really fair distribution of chances for everyone to build their business, be impactful either locally or globally. And that's really this positive note which I want to share with the audience. You have the chance to train yourself, and you have the chance to join an ecosystem which is decentralized, very inclusive, And we see, I am based here in Hong Kong, and we see ecosystems such as the Philippines, Indonesia, Malaysia, or Thailand really grabbing this opportunity. Should they be small teams, small SMEs, and really benefiting from all these benefits. So I hope this gives you a positive note, and I look forward to the next panelist and the questions and the conversations later on.
Okay, thank you very much, Charles, for your presentation. I have a question regarding the impact of CBDC, the financial system. So, do you think that CBDC could be a threat against private providers like the Libra or Ethereum? Do you think that there could be a competition between CBDCs and private cryptocurrencies?
You are spot on, George. I think we have this probably this alignment. I foresee a competition between CBDCs and privately issued currencies. And depending
Yes.
which countries, some regulators will authorize privately issued stablecoin, and there will be a competition. And probably, as you mentioned, the Facebook Libra, now renamed DM, has been the wake-up call for many central banks. Suddenly, they realize that the technology company were thinking of having their own financial system and financial infrastructure, and this has been really like, in a way, a kind of a bucket of cold water in their face, and pushing them to really react and accelerate their CBDC programs. And yes, there will be competition. Hopefully, the competition will be a positive competition, pushing everyone, should it be on the central bank side or the private companies or private bank sides, to really provide more competitive and better products. But yes, I totally agree with you, George. It's happening right now in some part of the world, and probably in Africa we will see also some CBDC initiative which will need to compete with privately issued stablecoin. And what I foresee is the people who understand the best the technology will be able to bring to the market the most valuable money. And I can easily imagine that, for example, if you take the example of, let's use the US dollar for this example. Maybe you will have the choice to use the US dollar from the Fed, or maybe use the US dollar from a private company. And it will be everyone's decision to trust which one you prefer to use. But I foresee that some of the private US dollar and private other currencies will bring more features, will bring more comfort, will bring more velocity into your payment and financial activities. And this will push the CBDCs to bring more value. So yes, indeed, some competition is coming, but that's the way it should be. We don't want any organization to be sleeping on their current position, and competition should be healthy, and when it's healthy, it's always welcome.
Okay, thank you very much, Mr. Charles Dorsey. It has been a pleasure to discuss with you. So I will move to the fourth panelist, which is me, because Mr. Joseph Arinetwe will talk at the five. This will talk after me. So what a minute. So I will rather introduce Mr. Joseph Arinetwe, and after him, I will have the floor. So Mr. Joseph Arinetwe is the Vice President of Mgurush Mobile Money in South Sudan, and he will discuss with us on mobile money. So Mr. Joseph, you have the floor.
Thank you, George, and fellow panelists. It's a pleasure to be here. So we called Mgurush out of South Sudan. South Sudan, as most of you might know, is a new country. Got its independence in 2011, so just about 10 years old. So one of the youngest countries in the world. So in terms of infrastructure, there's not much banking infrastructure. And therefore, for us, this mobile money presents an opportunity to bridge this gap that exists in this young country. We went live in 2019 in July. So we're about almost going to be 2 years old. Prior to the pandemic, cost us some time last year, sort of destabilized us, so we lost some time, but we're now back on track. We are the leader in South Sudan in mobile money and digital services. Our model is quite different from what most countries are implementing. Most countries implement either a bank-led or telco-led mobile money service. In South Sudan, we are implementing a platform-led mobile money service. And one of the few countries in the world actually that have successfully pulled off this line of mobile money. So we are neither a bank nor a telco, but we have the platform and the services, and we connect to the various players, be it the banks and the telcos. They fetch services from us and expose them to the last mile. So that's the model that we run in South Sudan. It's a platform-led mobile money. In the region or across, most countries increasingly doing a telco-led mobile money. Ours is a platform-led. We are nonetheless regulated by the Bank of South Sudan, the Central Bank of South Sudan, and the National Communications Authority. So because we're handling money, the central bank oversees all our operations from customer onboarding to compliance checks and money laundering, transaction limit setting, customer service, audit and compliance. We currently have almost 300,000 customers on our platform. Our goal is to ensure that by the end of Q3, early Q4 of this year, we have 1 million customers on the platform. We are aggressively growing our agent network. As you know, having a platform is one thing, having an agent network through which your services will be consumed is another. So we're spending a lot of time and resources growing our agent network, currently at about 3,000 strong across the whole of South Sudan. And an agent network typically comprises of small businesses, standalone, young micro agents who are just starting up, small entrepreneurs, to banks, to petrol stations, to hotels. All these are eligible to be our agents, and we are signing all these up across the country. The idea is that you should be able to go to any of these agents and do a transaction. And the typical transaction is either that you load cash onto your wallet from this, or you withdraw money from these agent locations. We traditionally run our service on a USSD access. So as long as you have a phone and it has a network and it's connected, you can just have a USSD access. You dial it. We have an approved code that will then expose you to the menu, and then you can transact. We also have an app. If you have internet, you can also access our service through the app. We also recently able to access the service through WhatsApp bot service. Traditionally, the services that are available on our platform, and we constantly are growing our array of services. The vanilla, you can cash in, you can cash out, you can do bill payments, so pay for your water, pay for your electricity, pay for your cable TV. You can move money. We've connected about 10 banks to the platform, so you can move money from the wallet to the bank account, and from your bank account to the wallet. And this is creating this whole ecosystem where funds can quickly and cheaply move. We also doing NGO payments. As I mentioned in my opening remarks, this is a new country, so there's a lot of humanitarian support from the UN and the like. So most of these NGOs traditionally move money support through cash, but increasingly they are looking at our platform as a vehicle through which to reach their beneficiaries digitally. It will be cheaper, it will be better for the beneficiaries, it will be cashless, will bring down the cost of doing business, and increasingly we see ourselves as the go-to person for NGO payments. We also signing up schools and universities for fees payment, to enable transactions move much faster. So in a nutshell, what are the benefits? As I've said, this is a very large country with not a lot of financial support infrastructure. So our mGurush service has been able to digitally connect the whole country. We're having more and more people be able to join the ecosystem. So financial inclusion is happening at a much faster rate because people now can conveniently and affordably be able to perform financial transactions. The banks actually do offer this, but the banks are limited because they are only in the bigger towns. But outside the bigger towns, where we are able to offer financial services, and by so doing, give people a chance to conveniently and affordably perform or have access to financial services, which is actually a basic service under the UN Charter. Access to finance, or the ability to perform financial transaction, really should be one of our rights as human beings. So we're happy that we're able to offer this. The other benefit that I see is that we have been able to bring down significantly the costs of moving money, and therefore reduce the cost of transactions, which translates into a healthier economy. We're able to digitalize the agricultural value chain. We're able to also boost domestic savings. People don't have to carry around cash. They can use our wallet as a store of value. We don't charge our customers for depositing money on their wallet. So increasingly, they see this as a channel through which they can save. We also creating employment through the agent network that I mentioned about. We primarily are encouraging, especially the youth and the women, to become our agents. And we believe that our proposition is profitable because we pay commission per transaction that each of our agent network does. So as the number of transactions grow in our ecosystem, we are creating an array of entrepreneurs that are able to build their businesses on the mGurush network. We are also exposing our agent network to the banks. We really are not in competition with the banks, but our proposition has always been to say that we complement each other. And having said that, we offer our agent network to the banks. So in places where the banks are not, they can come to our agent and do a bank transactions. Likewise, we are also using the banks as our super agents for cash liquidity purposes, moving money across the country, and so by so doing create an interoperability in the whole ecosystem. In terms of challenges, the biggest challenge that we currently face is that this is a new product, and therefore trust is an issue. Initially, people play a watch and hold, watch and see situation because they are not sure whether their money is safe with you. And so that is one. So increasingly, we are seeing that over time, the trust levels are increasing. But also the other issue we see is awareness. Some people might look at a phone and look at an mGurush advert, but they will not relate it to how they can personally benefit. So that link between a phone and money and how a person can benefit is a challenge. So we spend a lot of time and a lot of resources trying to create awareness so that people can understand the personal benefits that can accrue to them as a result of joining the service. I also would like to mention that we have also just signed up last week with Visa, and we are going to launch the first companion card in this country. And the first companion card that will be able to be available to anyone with an mGurush wallet tied to a Visa card. And that means that you can now be able to do transactions outside the country from your local mGurush wallet. We think this will spur e-commerce transactions, will spur cross-border transactions, and we will literally digitally connect the country. I'd like to stop here for now, and thank you for the opportunity, and I'm happy to take questions. Thank you.
So thank you very much, Mr. Arinetwe. I have a question which is coming from one of the attendees. So the attendee is posing that is asking, is there a difference in using mobile payments in South Sudan and other countries in Africa?
Okay, so the technology, really, the basics are the same, the fundamentals are the same. So we would be the same as the M-Pesa in Kenya, the same as the MTN mobile money, the same as Orange Money. So it's really the same concept. And the idea is that really giving access to people who have previously been financially excluded by using the mobile phone as a channel of reach. So this is exactly what we are doing in South Sudan.
Okay. So, but to go deeper in our reflection, so from your experience as a mobile money provider, so
yeah.
How do you envision the challenge related to the lack or to the absence of internet connection, knowing that blockchain is energy consuming? So in Africa, in South Sudan, in emerging economies, where sometimes we don't have a stable internet connection, how can we address that issue?
Okay, that's a very good question. So there are two major challenges, actually. One is the access, and the other is the cost.
Yes.
So there's both cost and accessibility. So in South Sudan, we actually face both challenges. Traditionally, we actually, even when we launched, we were running literally this service on a VSAT satellite link. And as you can know, that's not very stable. But about 1 year ago, we switched to fiber. Now, fiber is more stable, and the cost has actually almost gone down by almost 10 times. Okay, so with the increase of fiber, across Africa, and as the cost goes down, I think that issue will be addressed. But I think we are still a long way in terms of reach, because it will take a while before all these towns and villages are digitally connected. But I'm happy to note that in South Sudan, the drive is on to quickly cover the whole country. In the neighboring countries, because we are part of East Africa, we are part of the East African communities. If I can, if I can talk about Uganda, Kenya, Tanzania, Ethiopia, all these countries are literally digitally connected, border to border, so even deep in the rural villages, you can get a good internet access. In South Sudan, the drive is on, so I'm sure in another 3 to 4 years, the country should be digitally connected. But yeah, back to your point, I agree. It's a major challenge, both in terms of access and cost.
Okay, thank you very much, Joseph. Thank you for your presentation, for the response to the questions. So I will move to the last panelist, and so I will discuss on the topic that I am supposed to present, which is the impact of cryptocurrencies on the development in Africa. So the theme is, are cryptocurrencies the future of social communities in Africa? I will begin by telling you how I have been introduced to the blockchain industry. It seems surprising, but it is true history. Because as I was looking for an alternative financial model, I discovered that prior to the advent of liberalism in Europe, there was a decentralized financial model. It's been that social communities, professional bodies were able to issue by themselves their financial instruments. And that decentralized model has been ended by the advent of liberalism and financial centralization with the establishment of central banks. So, but when we consider the advantage of the internet through the history of financial development, we notice that it seems that internet is making us to go back to a natural order where people could be able to initiate by themselves their financial and economic independence. But the challenge in Africa is a little bit different, because we suffer from the absence of internet connection. Our economy seems to be a little bit fragile, and maybe we could try to find a bridge between our heritage, our economic heritage, and the opportunities of the blockchain industry. So, what could be the opportunities for the blockchain industry for Africa? we are all aware that in Africa, let's say we have many lands, you have let's say a raw real estate industry. It means that our real estate industry is not really developed.
Hello, George.
It's industry. So as people are relying on their social identity, I think that internet blockchain industry, blockchain technology could help us to, let's say, to digitalize the identity as we do, as it is appearing or occurring in the land title process in Ghana or in Kenya. Then, if the social identity is digitalized in a blockchain environment with the support of the land ownership, then it could create a path to the issuance of cryptocurrency, which could be run like stable coins. And from that position, there could be the tokenization of real estate assets as a mode of issuance of cryptocurrencies by community. So the challenge is that although Africa has not all the potentialities of the Western countries, we can deal with its current background in order to help it to move in the blockchain industry. And from my point of view, it is possible with the tokenization of the real assets that we have here in Africa. So as we are running out of time, I have been obliged to synthesize my presentation. So thank you very much for the attendees. Thank you very much for the panelists. I don't know if you have other question to the panel for the panelists.
Yes, actually, we have a few questions from the attendances, but we're running out of time. So I'm going to ask you a question, and after that, the other questions, I'm going to post it on the LinkedIn group for the Fintech conference. I will share with you the links, and there all of the panelists can answer the questions. Is that okay for everyone? Because after 10 minutes, we need to start the other panel.
Okay.
And the question for you is, what do you think about the idea each country to create its own cryptocurrencies? Is that a good idea or?
From my point of view, it's not a good idea. Why? Because I think that as currency is a good, and that there could be private provider of currency, we must reach a position in which government will no more issue currency. They will give the opportunity or the power to the private provider to issue currency, and government would only arrange or organize the payment system. Organize the payment system. The government could arrange and organize the payment system. Government could also manage the interface between those different crypto currencies. If you want a really decentralized environment, from my point of view, government should move out of the issuance of cryptocurrencies.
Thank you for your answer. I want to thank all of you. You were really great, and it was a pleasure to listen to you, to listen your experience, your opinions. And now we have 10 minutes coffee break, and we're going to continue with our next panel, which is digital banking and platforms. All the panelists from this panel can stay and listen to the others. Thank you. I will post the questions in fintech in digital banking group in LinkedIn. I will post the link here. Thank you very much.
Okay, thank you.
Bye.
Bye bye. Bye bye.
Hello, can you hear me? Okay, perfect.
Hello.
Hey.
Hello. Hello, everyone. I'm glad to see you. I guess everyone is here. We just wait for Noah. And we're going to start with the next panel. The panel is digital banking and platforms. The moderator of the panel will be Ms. Noah Shaker. Noah, are you here? The other panelists are Ms. Elif, Mr. Matteo, and Ms. Hafu. How are you?
Well, good. Thank you. I think that Noah is
Very
around.
well, thank
There we
you.
go.
Yeah, I see her too.
Yeah, I see her, but her microphone is mute, so I guess
Nice to meet you, ladies.
Nice to meet you too.
Nice to meet you.
Hello.
Well, we still have 3 minutes to go, so there we go.
Yes.
Where are you guys based?
So I am close to Lisbon in Portugal.
Beautiful.
And you?
I'm in Côte d'Ivoire. I'm in Abidjan.
Oh oui, c'est vrai, en plus, tu es francophone. Maintenant que j'y pense.
Oui, je suis francophone. Exactement.
On va
devrait
annoncer
faire plus de conférences comme ça en français.
Absolument.
Parce que la plupart du temps, on laisse les francophones en dehors de ce genre de conversation. On nous oublie presque.
Mais en fait, il faut qu'on parle parce qu'on va lancer justement une émission radio sur la Fintech en français avec mon ami Alexia, tu vois, de celui qui... Alex, tu vois pas qui c'est? Il est basé à Abidjan en plus.
Until we wait Noah, I can say a few words about you, about each of you. Let's say with Elif. Elif is owner of Contentious Solutions. It's a Berlin-based fintech consultancy coaching, and she has 12 years of international work and executive experience in a variety of areas: business development, project management, strategic management, legal and regulatory topics. And the panel and the topic that she shared with the panel will be embedded finance. Next one is Ms. Hafu. She is the founder and CEO of HTC Partners, which is an advisory firm that aims to provide investment, readiness, and capacity building service to SMEs across the African continent. The topic she will share will be new business models enabled by the digitization of finance. Then we have Mr. Matteo. He's an unconventional investor, entrepreneur, and thought leader with 2 decades of experience in financial technology. For 3 years in a row, Financial News has nominated Matteo as one of the 40 most influential fintech executives in Europe. The topic you share will be how to select the proper digital transformation platform. And let's start with Elif and your topic, since Noah is delay.
Yes, I mean, thank you for this kind introduction, Stanislava. I will be talking about embedded finance, but it's more of a dialogue than a monologue, so I won't be mansplaining you what embedded finance is and why is it needed. I think most people here, they know why embedded finance is important, but I think it's important to see it from different angles. And I know that in the afternoon there will be a broadcast about embedded finance and the opportunities it presents on the retail and the service for the retail and the service sectors. So I think it makes sense to focus on the financial services angle right now, to talk about why is it more of an opportunity than a threat for banks and financial service providers, which is actually not how they see it, but I think we should help them understand that this is actually like a silver plate filled with opportunities for them. And I would also be very happy if all the other panelists also chip in too, because they also have decades of experience in the area. So I mean, what is
Sabna, can I actually chip in so we make it interactive and not a series of monologues, which is of course pretty boring. Not that you were boring, but the panel is going to be boring if we just talk one after the other. I actually think it's going to be very healthy to give your own definition of embedded finance, because it's a relatively new concept. Right, so everyone understands financial services and innovation applied to financial services. But okay, our moderator is back. Great.
I'm terribly sorry for the few minutes delay. Please go ahead.
No. So actually, I don't think it's going to be useless or too much to give your own definition of embedded finance, and maybe we can complement in the starting from there. But I suspect, Sebnen, that this is exactly what you were about to do, isn't it?
Yeah, it's a small start. So basically, I mean, what is embedded finance? Embedded finance is the integration of financial services into non-financial services. Yeah, and when we are talking about integration of financial services into non-financial services, we're talking about payment services integrated into retail. For instance, Zara cooperating with Klarna and PayPal for payment services, or POS payment services, or IKEA taking it a step further and trying to become a bank. Walmart, investing in a fintech startup or acquiring a fintech startup to start its own financial services. These are all in the definition of embedded finance. But this is more towards the retail and the service segment. From a banking perspective, we can also think about a bank which is very specialized and has a narrow focus and cooperates with the banking as a traditional and incumbent bank that is offering banking as a service, services, banking as a BaaS services to fintechs and other service providers to enhance their value proposition and to open new revenue channels. So this is basically embedded finance in a nutshell.
I would agree. The example I was saying that I would agree, and the example I always give in the B2B space is Booking.com, right? Which is a travel agency that all of a sudden, and the reason why I always name it is because a good friend of mine took care of the whole financial services platform, is Daniel Marovitz. And but payments, credit, and collection is just the first step, because the next step, of course, is going into the lending, because the business they are doing with hotels is very much predictable, so they know how much every hotel is going to pay back to Booking in commission, and that could be perfectly part of the repayments of a debt that they can create, and all of a sudden it's going to be embedded in a platform. Banks won't be needed. It's just in the space of a click, the client is already profiled. So yeah, I agree with you. That's the future. Sorry, no, this is the last time I do a non-panelist intervention.
No, it's okay. That was absolutely
No, I actually agree. I wanted to provide some example, and I think that having a more like interactive conversation will make for a more interesting experience, at least for the participants. And I think, you know, even given the context of Africa, there's so many ways that we could have embedded finance. So like, I'll give a very specific example. So we have a lot of like different, you know, store managers that are, especially wholesalers that are in direct contact with like, you know, small, like les petits commerçants, like literally small buyers and stuff like that. And lately we've seen, and you see when we talk to a lot of these like small sellers, they're like, yeah, he lends some of these products to me. You don't immediately associate what he's doing with finance, but he's pretty much doing some micro lending. He's lending these products to the ladies so they can go out and sell it. And then as soon as they get the revenue from those sales, they go and pay him. So these are like simple type of like embedded finance that we've seen happening with different, like even Uber going into insurance. That would be a very clear, into car insurance. That would be a very clear alignment. We've seen even when you go to Macy's and all of these stores, they now have their credit cards, right? Because they know their customer, they know who's coming, they know who has a really good chance of actually not being delinquent and paying those interest rates and paying their bills. So it's really making sure that finance is as embedded in all parts of our life and finding clear synergies, not like you're a restaurant and now you want to go into, you know, insurance or something, but like identifying clear synergies. And if you're the best person to meet that, we don't need to go to a bank to lend to these small players, because not only do they not have the reach, but they don't have that relationship, right? So if you're the wholesaler, the bank should be able to support you so that you can continue to lend to those sellers. So that's how I kind of see it on a day-to-day basis here. Yeah.
Thank you very much, Hafu. Thank you, Sebnam. Please, you were adding something?
Yes, I just wanted to quickly add, I mean, yes, we're talking about embedded finance as if it's a segregated part of financial services, but it's just actually built on 3 very basic pillars. It's about superior customer experience. It's about omni-channel experience, so giving your customer not only what you think is necessary, but what they could be using in the long run, and an end-to-end experience. So Uber is not just a provider of you know, delivery services anymore. So it's not about mobility anymore, but you also have to give financial services or insurance services in addition on top, or additional services that might be needed in the long run. So these 3 pillars are actually what embedded finance is built on.
Thank you very much, Sebnam. Well, and Hafu, of course, and the wonderful impact my friend Matteo has added while playing the role of the orchestrator in that thing. It was really, really interesting. Well, definitely we are living in really interesting times. Being the banker myself and being active within the fintech ecosystem for the past 6-7 years, I see change happening every single day. It's not the pace that we used to see before. One of the developments that I personally find really of value to serving financial inclusion, offering financial services, whether it's banking or non-banking, to the unbanked population, whether they're individuals or businesses, seeing instant insurance, digital insurance or micro insurance built and bundled with other services targeting the same segment as the tipping point, as we say. Embedded finance, or how I like to call it, lifestyle finance, that is triggered by a certain life event, is definitely the future of the financial industry. One thing about, actually 2 things about the financial industry. Number one, it's the most profitable because you're mainly trading in money So it does not get any better. And accordingly, every industry that has the capabilities on the ground to build a layer of financial services, whether it's offering lending solutions, whether it's offering insurance or offering payment, is going to be attempting that move very soon if they haven't already done that. The second thing about it is that financial services are very straightforward. The only key barrier that still exists in some parts of the world are the regulatory frameworks that governs who has the capacity and ability to offer financial services and who does not. And now this is changing as well. So again, it breaks my heart to say it as a banker, you need to shape up or you will be out of the game. Because even central banks are working on open banking regulations. They are working on offering financial service provisioning licenses to fintech startups and any other company that has the capacity and capability to build that layer of financial service provisioning and serve the unserved. Because again, it's an imperative to inclusive and equitable economic growth, so they cannot simply ignore. Banks are no longer protected by the regulators anywhere in the world. Insurance companies are the same. When you look at an inclusion, financial inclusion rate in certain countries in Africa, that is not more than 10%. When you look at an average insurance penetration rate of 2% on average, this is sad. And we've had banks for more than 200 years, structured banks for more than 200 years, and we've had insurance companies for forever. And yet, the main concentration of focus is only on high net worth individuals, A+A and perhaps B+ of segments of the population that has decent jobs. They have the right credit history that banks can build upon and be comfortable accepting the risk of those people without having to understand the market needs, without having to customize digital platforms to serve those people optimally, without having to design the right financial solutions to cater to their needs. I mean, those days where you sit in your office all day and you still make 30% year-over-year growth in your profits is over. You have to move, build the right technology infrastructure, revamp your value proposition according to the needs of the new target market segment. And again, we haven't yet touched base on the needs and the requirements of the new generation. So once the purchasing power fully and the investment decision making is transferred to the current generation, like generation Z or even generation after that, things are going to change significantly. And definitely that ecosystem of help and support that has enabled that and will continue to enable it is one of the key inputs in guaranteeing the evolution of the financial industry. What do you think, Matteo? What is it that we need to work on if we want to build that vibrant fintech ecosystem that pushes incumbents to innovate and supports startups?
So to start with, Noah, I think that Stanislava forgot to mention in my bio that I am actually a fintech investor, or an impact investor in Africa, actually. So that's the most recent activity that I took is not full time, but I'm a venture partner for Bamboo Capital Partners, and we are investing in seed and Series A startups, impact startups across Africa. And it is the fund is called Block Smart Africa Fund. Is in collaboration with Smart Africa. So, but we are not actually focusing exclusively in Smart Africa countries. But that's important because one explains why I'm here talking in an Africa and financial inclusion panel. And two, I want to highlight the fact that we are now actively investing. We will announce our first deals in Ivory Coast, by the way. So this is what I was saying to Hafu, when we were chit chatting before the panel.
Yeah, that's
so okay,
great news.
Exactly. So this being said, I think that African ecosystem has done a tremendous progress. At least since I'm dealing with it, which is 2015, when I started with the Media Network investing in Africa. Before, I was just like a conference dude, doing there and doing speeches, but not actually doing anything concrete. In the past 6 years, and Noah, you know it well because you're actually an integral part of it. Ecosystem started to realize that it was good to create some sort of infrastructure to tie all the pieces together, and the pieces are the incumbents, the startups, the technology platforms, the investors, and the regulators. Eventually, academia has done a huge process, the whole ed tech industry, with the Andela or the Duartech in Morocco, plenty of this coding academies and entrepreneurship initiatives, have taken place. What is missing today, it is actually, I want to say time, because you can't actually go faster than what your ecosystem is capable to absorb. We all say that capital is missing, but at the same time, there are a lot of early stage investors that are facing the continent. What I wish the ecosystem would push more is what I call the entrepreneurship culture, because as this is also wasn't mentioned but is relevant for Africa, I created a not-for-profit platform called timepledge.org, and Time Pledge is coaching and mentoring African entrepreneurs for free by bringing coaches from outside the continent, pair them up with local coaches. So it's not just someone coming from outside and preaching the evangel, and the coaches on soft skills. So how to pitch your startup, how to bootstrap your company, basic financial models, how to apply communication skills to your bootstrap company, and all that. And the reason why I believe more of this is needed is because sometimes being an entrepreneur is actually an escape from a failed professional career for many people, right? On one side. On other side, you have photographers or street vendors that, because they are an independent worker, in their head, they are startuppers, and they go to raise capital. In my Time Pledge courses, I see a lot of people who doesn't understand what being an entrepreneur is. And there is nothing wrong in being an entrepreneur and not being a startupper, but even this basic definition, they need help. And so that's what I believe it's the part of the bottom-up approach that is needed. And I'm not even sort of verticalizing it into financial services. This is a global startup tech for good approach across the continent that has to be pushed. This is what I would say.
I couldn't agree more. Definitely, the ecosystem is a natural creature. It takes time to evolve and develop. We can provide some sort of catalyst to speed up the process, but definitely takes us time to evolve and mature. I couldn't agree more about the entrepreneurship culture and the fact that we need to push for it. We need to push for internal innovation activities within the corporates, the incumbents, to feed in that pipeline of industry expert entrepreneurs who can actually build startups that grow and succeed. I couldn't agree more. And actually, Matteo had a really interesting initiative about building that internal innovation corporate culture a few years ago, when he had achieved a lot on that side of things. There are still a lot of other challenges, Hafu, that faces the startups, SMEs, and investors, of course. So what are those key challenges, and how do you think they can be addressed?
Yeah. And I really like how Matteo started. I think it'll be really good to give some background on who we are and why we're even entitled to enter some of these questions.
He's a good marketing and a sales person. He's like the best there is, you know. Should hire him to do marketing and sales.
So yes, so I'm Hafu. I'm originally from Cote d'Ivoire, and I spent some time in financial services in the US. So I was at Deloitte in the financial advisory practice. So really mainly advising large banks and financial institutions, private equity funds, and so on. And then I moved back to Abidjan, working with a private equity fund, and our goal was mainly to invest in private equity, in like SMEs, right? It was a fund that wanted to do like $3 to $5 million tickets around like Francophone Africa, which was rare, and also focusing on specific sectors around the import substitution, consumer products, technology, healthcare, and so on. So then I went back to the US and I did my MBA at Wharton and a Master of Public Administration at the Harvard Kennedy School, where I really focused on how we can integrate the public and the private sector to mobilize financing for SMEs. So back to your question in terms of the enabling environment, I think that is why it's so important to really understand the context and even all of the operational framework in which these startups and these entrepreneurs operate, right? So when you think about one startup, and now I'm coming back to even the financial side of it, is that one, there isn't enough, I guess, structural steps to how to even be formal, or like even how to make sure that your company has a bank account. It's like really much later in the life of a company that they see the need of becoming formal, that they see the need of having a bank account, that they see the need of tracking like their inputs and outputs and like understanding their financial, right? So how do we kind of make sure that we could have all of those elements integrated in their business, but without disrupting too much, without having the super, like literally being here, some of the banking fees are 2 times higher than for any bank account I will have in the US. And that's just like outrageous, right? So, I mean, I wouldn't even advise like, oh, just go open a bank account for the sake of it. Because, you know, when you compare them to get, I'm sorry?
The onboarding process itself is a pain. I mean, even
the onboarding process is the same. Like they ask for so much documentation. The fees are almost $20 to $30 per month just to have an account. And then those are the same banks to get a loan. Let's say you want to get a $10,000 loan as a company, they will ask you for $8,000 guarantee. And I was like, if I had $8,000 sitting around, I wouldn't come and ask you for 10,000. Maybe I'll ask you for just 2. You know, so all of these factors come into play. And then I also want to mention the gender component, where you have all of these women that don't have enough assets under their name and so on. So when they're asking for collateral, there's so many issues, right? So when we're thinking about like how we can bucket them, so I would think first around the enabling environment, the structural issues around the banking system, and all of the factors around that. So like really loosening the eligibility criteria, focusing more on being, you know, more risk takers and not necessarily like a fee-based model, which is really what the banks are doing here. And then when you're thinking about from the context of the entrepreneurs and the startup, we need to have like easier systems. So if they're using Orange Money, MTN Money, or all of these like mobile payment apps to make a lot of their transactions, let's track that. Let's see what is coming in, what is coming out. Let's put in place application where they can actually, you know, use that data to see, and this could be used to really calculate their asset, their revenue, and use those models. And then the last piece will be to really make sure that we are not necessarily expecting the same, you know, parameters as we will in other settings. We need to really contextualize all of the requirements when we're thinking about, you know, startups and what it would take for them to scale here. So, yeah.
That's from the startup point of view. Are all those initiatives government driven by nature? Can the private sector, the incumbents, other players within the ecosystem take part in it? What do you think? Sabnam was just a comment. Hafu, still?
No, I'll pass the mic to Femna if she wants to add something.
No, you were just continuing.
Okay.
So,
So in terms of what governments can do, I think there's a lot that they can do, especially around, loosening the process. So there's this process of like guichet unique to set up a company, like making it super easy where a company can come with this, statutory document, a name of a company, and in one day they can, formalize their company, making the fees smaller, because then, I think it's much easier to have, 1,000 companies that are formal, or like it's much easier to have 10,000 companies that are becoming formal for like a fraction of the fee than having only 1,000 companies paying $100 to structure that company. So making those fees affordable so that everyone that wants to, register their company can do that, and making the process as easy as possible. I think that responsibility comes to the governments to make sure that the process of structuring and legalizing and formalizing your institution is easy, it's affordable, and it's straightforward, so that we have a much, much less, informal sector. The second piece is to work with the banks. The banks needs to have a different approach in terms of, how they lend to SMEs, and the way that could work is by setting up, for example, guarantees. The government could set up these like guarantees, like the fonds de garantie, where they can lend to these institutions or like do lines of credit, so that they can then lend to SMEs at like better rates or even at a higher frequency. So there's a lot, and there's a lot of capacity building that the government can do, setting up incubators, accelerators, like, developments or like technical assistance to build the capacity of all of these entrepreneurs. So the government definitely has a role to play, and it's important to note it.
Thank you very much. Regulating for fintechs. I mean, we have seen the open banking regulation. I mean, both Elif, Sebnam, and Matteo are operating out of Europe, and they have engagements in Africa. Do you guys think that applying a similar model in here, I mean, coming up with a similar regulation that gives customers the ownership of their data, like enforcing open API layers to be adopted by banks and made public and available? Do you think that can help and accelerate the growth of fintechs within the region, as in Africa, of course?
Well, I'll say yes and no, which is a typical lawyer's answer. And speaking of that, I would also need to give a bit of a background about myself too, like the other panelists did. So I'm actually a full qualified lawyer from Turkey. And after 7 years of traditional banking and legal experience, I moved to Germany, where I became very close with fintechs, and I worked for different fintechs like Finip, Kringle, Lendico, and so on. And since 2 years, I run my own boutique consultancy. And what I do is basically I consult a lot of different international companies, and I also like contribute to a lot of blogs, and I'm one of the Fintech Circle and Wiley authors. And while doing this, of course, all this work like consultancy and like contribution, content, and so on, this needs a lot of interaction. What I do is interacting with a lot of different ecosystems. And I think this is very vital for the growth of the community. And speaking of different ecosystems, I would actually like to talk about a financial inclusion initiative of Luxembourg House of Financial Technology afterwards, but just putting a placeholder now. And coming back to your question, So I really like how the European regulator gave the ownership of the financial data to its customers. So it actually doesn't belong to the companies anymore, and the customers can move freely and can choose whatever application they want and utilize their financial data in a way that fits them the best way. But I don't think there were many applications, and you can also see this in the open banking and finance reports of both UK and EU, that there were many applications that really utilized this open banking, this puzzle. So what is missing? So are the customers not educated enough? Are financial institutions not making use of this opportunity, or still seeing it as a threat? Or was it too cumbersome for the financial institutions from a compliance and compliance point of view, from a budgetary constraint point of view? So that being said, I mean, yes, this is a great innovative regulation, and this definitely push the banks and incumbents to see further than what they usually see. So they push them to innovate, to contribute to basically open up space for competitors, but it wasn't enough. And just taking the regulation the way it is, for instance, this is what some countries are, just in Turkey. So Turkey actually is now trying to enact PSD2 the way it is, but without actually looking into what has been developed ever since, and what were the mistakes, and what were some of the learnings that the ecosystem made. And without doing that, I think taking any law, no matter how good it is, directly and applying it to Africa, for instance, just doesn't make sense. So you have to, of course, look at the local market, the local ecosystem, the needs, how the customers operate, how they see how educated they are about their financial data and making use of it and what to do with it. So these are all the factors that needs to be considered. And all in all, yes, this is needed to apparently to push the banks forward. But of course, when designing such a regulation in another ecosystem, in another continent, you have to make sure that the financial institutions that might not be as strong or as powerful as the European ones are, crushed with the burden of this regulation, and you perish this market too. So basically, while doing that, you have to work with other ecosystems and try to create a balance. But definitely a regulation that allows more control of financial data and more control for the user is needed.
Thank you very, very much. I definitely second that point that is related to the readiness of the banks within certain markets. And definitely there is an element of capacity building on the side of banks themselves to make sure that they have the right infrastructure, they get rid of their legacy systems, and they can cope and actually get use of such regulations. Once we take Matthew's input on that, we're going to go back to Hafu to see from her point of view what amendments or changes can we make to such powerful regulation to actually suit Africa and tackle some of the challenges that she has mentioned a few minutes ago. Matteo, please.
So I would like to recenter the conversation on where we started, which is embedded finance, okay, and talk about like a couple of concrete examples, which I love, and I think that people who attendees will understand them better. I don't believe anymore that focusing on like on a single service like payments or lending and startups that do a single thing will actually have the opportunity to scale. Why? Because very often, like 54 countries is, regulation is different. So the only way for the ecosystem to thrive is to be able to, like a Tetris, sort of make a conglomerate of services, technologies, and platforms that do at the same time payments, lending, data, profiling, digital identity. And the only way to do this is actually being able to access and to make the data circulate freely. I'll give you
you pushing startups towards like partnering together, consolidating together into bigger entities?
So I have actually a couple of, so take a country like Mozambique, okay, which is helpful because Mozambique started their fintech association a couple of years ago. The first fintech panel ever was 3 years ago, so super recent. They now issued an RFP for a fintech regulation, so they are really now. There are less than 100.
Joined the Africa FinTech Network, by the way. So
exactly.
Which is really great news.
So Portuguese speaking Africa is less than 100 million people. Okay, so but still relevant, right? So, and the only way to make the fintech ecosystem work in a country like Mozambique, which is, we're still talking about 30 to 40 million people. I don't know the exact number, but is to combine, for example, a platform for digital payments, with a platform for lending, and maybe even with mobile wallets from the telco operator that can actually be the carrier, for all these services to be put in place. And or like another example in Nigeria, you have this micro lending. There are a dozen of micro lending companies, but the smartest of them, they partner with telco operators, because all of a sudden, instead of they do micro lending with the purpose, and in this case, is micro lending for the mobile device to be bought. But again, at the end of the day, the last meter or the first meter, according to how you see the thing, is about data to be shared. So I completely agree that having a consent-based approach on data, so that the user becomes the owner of it and they can share whatever set of data they want with any counterparty, is going to be vital for these services to start conglomerated, being conglomerated. Otherwise, in a country like Mozambique, or even in the whole Portuguese speaking, say Mozambique and Angola together, a simple payment services won't cut. It will be a nice lifestyle business for the couple of founders, but it will never scale.
Thank you very much for the different perspective. I absolutely loved it, of course. And actually, you raised a very important point that we can later on tackle, which is the evolution of fintechs. How do we? I mean, we always talk about the evolution of incumbents, banks, or and the like, but we never touch base on the evolution of fintechs. Are we going to continue to see them operate the same way? Are they going to adopt different business models? Are there going to be different tendencies? Let's tackle that later once we hear from Hafu on what needs to be customized, especially for Africa, to make such initiative impactful.
And when we're talking about customization and we're talking about Africa, that always, for me, it's like an oxymoron, right? You can't talk about a continent with 54 countries, at least 20, and this is if we're talking about official languages, but then hundreds of ethnical groups, and it's an extremely diverse continent. So when we're thinking about even customization, we really need to think about groups, cultures, and countries, because even within a country, you have completely different parameters and groups. And then another component that I think it's really important to, to mention here is social classes, because I see the debate around privacy, around, data protection and all of that. But you have parents that couldn't hear, that are in rural areas, that couldn't hear from their family for months, until, years sometimes, until they have finally enough money to go to the village once a year. Now they have WhatsApp, they have a lot, and what WhatsApp has been great, it's even been able to break barriers in terms of people that are illiterate as well. They have the voice note component, they just send voice notes. So you have grandmas that can now talk to their children, you have people connecting. So the least of their concern is, at least from, our understanding here is the data privacy and what it's going to be used for, you know? So when we're thinking about customization, there's so many factors taken into consideration. So there's the countries, there's the people in those countries, there's the, you know, the social classes, the factors and all of that. And then when we're talking about from a regulatory perspective, there is a clear enforceable, like it needs to be enforceable. You cannot put in place, you know, processes and regulation that no one is going to abide to and no one is going to be able to enforce. It won't work. And then the last piece is really to remain innovative. It's really great to look what other places have done. Like we can see, you know, all the tech innovation in Silicon Valley and all of that. And also, again, the enabling environment. They have investors that are like willing to go there, that are willing to take those risks and invest in all of these companies. We don't necessarily have that environment here. So if we want to just, you know, take those, you know, what has been done in other places, but we don't have the same environment or the same like ecosystem, it will be tricky, you know? So it's to stay innovative. And a lot of great companies have been able to do this. You know, Flutterwave is like our, you know, African unicorn, and I know the founder, and there's so many other companies, you know, when we talk about M-Pesa, even when we're talking about even here in Cote d'Ivoire or in Nigeria, we have CoHub, all of these companies that are looking in their environment, seeing a challenge and are looking to resolve it innovatively, not looking what has been done elsewhere because they know it won't work, you know? So it's important to make sure that we have local solution for local problems. Of course, we're in a global world, so let's be inspired by what is happening out there. But that's what I mean by like really customized, local and adaptive solutions, and, you know, even in the fintech space.
Thank you very, very much again for that perspective. That is very much
grounded. It's an African panel, so yeah.
That is very much customer centric and considerate, as I would say. And again, fintech is all about inclusion. So that was definitely a very important point. And that brings us to one of the questions that we've received actually from our attendees, about the business models that are enabled by that movement of digitizing finance. And that is a question by VP, followed by another part, which is another question about how to select the right proper digital platform. With the absence of some regulatory frameworks and some of the fintechs operating in the gray area when there is no regulation, but they're not banned. I mean, those are two important questions. So what are the business models that we see most relevant to the needs of the financially excluded? Sebnem, would you like to comment on that? Since you're the advocate for embedded finance, I mean, you can tell us a little bit about your favorite business models when it comes to how inclusive they are.
Sure. I mean, actually, I think this is Hafu's specialization, or this is how I get it, but I'm sure she'll have the chance to talk after me. Yeah. And actually, talking about that, I would like to come back to the program I mentioned earlier and make a connection. So as I mentioned, Luxembourg House of Financial Technology runs this financial inclusion bootcamp for 8 days every year for African startups. And this is just a program subsidized by the Luxembourg Financial mentor of this program. So when I participated this program and saw the applicants and the people that were pitching to get to the final award, I actually had the chance to meet with wonderful entrepreneurs from Africa and coming from all around Africa. And the solutions they came up with showed me that actually innovation is not something that we should teach the entrepreneurs in Africa, but something that we should learn from them. You know, I mean, this is actually what VCs are saying too. The next big thing is in Africa. So I'm sure Matteo has something to say. I mean, obviously he's there. So it is the geography. It is a go-to geography. So actually there isn't much we can teach to these people, because in Europe we are more or less talking about a very limited area. So let's skip embedded finance and talk about financial inclusion. Here, the applicability is way more limited. So of course it's needed. Even in Germany, we're talking about the lack of financial education for women, especially financial literacy. So these are not the problems that we have fully tackled, even in Europe. But if you look at Africa, there, you know, some of the regions are dealing with much bigger, much more essential topics, and the way they tackle with it. So, you know, solving the lack of bank accounts with QR code payments, with you know, SMS banking and so on. You know, all these innovation ideas that we couldn't use in Europe, or we never thought of, is just showing that actually the business models are developing in the way that what the customer needs, and you know, what is available. So the local entrepreneurs are making use of what's available and combining it with the needs of the customers, and you know, actually creating the best possible result in the way. And I'm sure the more that, you know, more technical providers, BaaS providers develop, there will be more embedded finance solutions in the area as well. And we'll actually, if we watch the space closely, we'll see a lot more of very innovative ideas that will be very inspiring for us all.
Thank you, Sabnan. Well, like building a little bit on what you've just mentioned, and something that Matteo has said a few minutes ago about that, about partnerships and consolidation among fintechs, I would like to explore a little bit the collaborative business models, where we see collaboration from across industries, where we see telcos cooperating with banks or insurance companies, fintechs or insurtechs, in order to customize and develop value-adding financial services that again are inclusive by nature. That's a general question to everybody to answer. What is your favorite collaborative model out of those, and what are the successes that has managed to achieve?
I mean, I can think through, like, for example, what tech companies are doing here, right? They've realized that they have, you know, the cell phone penetration in our countries is like 90 or 100 plus. You have people with 2-3 cell phones, you know, thanks to China, where we can get phones for like $10. And then you have all of the mobile operators that have realized that, you know, low cost but volume is the key here. So they've realized that, you know, everyone has a cell phone. Not everyone will necessarily have, you know, access to internet or data and all of these to do these online transactions. And now there's mobile payment, where you just need a number, you just need to go, and they've opened up like literally these mini shops everywhere where you can recharge your mobile payment account. So that's like a perfect collaboration. The one thing that I'm worried about, being, you know, aware of some of the issues with telecom companies, it becomes a monopoly, right? They have our numbers, they have our data, and now we are, you know, transacting on them with them. So it's just a perfect one of those like embedded finance example. They know people want to transact. We don't want to go to Western Union. They've made those like very obsolete now. No one's, at least that I know, goes to Western Union or MoneyGram, or because you can just do it with your cell phone. So that's a key collaboration that has made people's life easier. And now we need to find a way to integrate it into a broader banking system. Meaning that if I go to a restaurant or if I go shopping, I should just be able to, you know, pay with my Orange Money and, you know, make it as cashless as possible in society. So, yeah.
Yeah, and that brings up the topic of interoperability and whether it exists or not, and the value it can add to the entire ecosystem, connecting all financial service providers, whether they are banking or non-banking financial service providers. Thank you very much for raising that. Matteo, would you like to comment?
So my favorite business model is the super app model. So and we see a few like this surging in Africa. Actually, there is one in Francophone Africa, you know, and it's a company called Gozem, and it's a company that we've been studying like recently, and they started with ride-hailing for motorbike, but all of a sudden they digitize salaries, they become a food delivery company, and then they become a leasing company for the drivers to be able to lease their vehicles. And it is a great example where you put the customer at the center, and then around it you build the right set of services that are all complementary. So some of them that are like a white labeled from providers. It's often the case, for insurance partners, and others they are like build it yourself, because there are and this is connected to what is the best or how do you pick up the right technology platform. There are actually plenty of companies that like the Mambu of the situation, for example, that is most of these are actually part of the InnoTribe cohort. Back at the Swift times, Mambu is one of them that are actually doing they call it composable banking, and it is that easy. So it's you don't need to have a full stack. You can just cherry pick the piece, that just you need to integrate, and then they plug in, is API based. So technology is literally the least of the issues for building this type of services, and it can be found for pretty much everything from salary digitization into like a credit scoring, into like building a landing platform. What you need to understand first is what is your strategy, and what can you do yourself, what can you outsource, and when can you do it yourself but as a white label, so like integrating a third. So that's it. That's all you need to do. You need to make it like a three three bubbles, and then at the center of it is the core tech, but everything else which you have to do yourself to adapt your existing infrastructure, and everything else you outsource. I mean, it's not complicated. The culture or like convince everyone that has to, sort of row in the same direction is the hardest part. And by the way, Sebnem, the Luxembourg is actually one of the anchor investor of our fund, and we have been working in Luxembourg since 2015. They're actually good friends, and I'm really happy that Nazir has went into this financial inclusion program. It's a thank you for mentioning it.
Yes, it's called Catapult for the entrepreneurs that are interested and would like to. We can also post a link on the LinkedIn group. But based on this action material, I would like to ask you a question, steal the stage from Noha, because you mentioned super apps, which is one of my favorite topics. Do you believe, or what do you think, that will super apps remain super apps in the long run? Because in the first era of financial technology, we had specialist apps, just special, nothing generic. Now we have the generalist apps that are doing everything from banking to food delivery and so on. What is the next step? Will they remain generic or will they specialize again? So how do you see this trend?
So, well, it's very difficult to see what the next trend is going to be when super app in Africa is actually at the very beginning, because I can name 3 of such a kind of like complex platform, and then until WeChat doesn't like go to the disembark into Africa and replicate the model. But I do think actually that the specialization, it is only going to be in the back end. So cybersecurity will be a vertical for specialists. Digital identity will be a vertical for specialists, or like cloud services optimization will be for specialists. But everything that is the last meter, frankly, even yourself, I don't know how many apps do you have in your phone. I have at least 6 pages of them. Most of them are doing the same thing. I could group them in a single page for my investments, for example. And I would love to have a single interface that deals with, you know, my traditional wealth management systems and my alternative. Let's take, because your question is not just for Africa, I guess, you know, it's a generic question because, you know, I live in Portugal, so my investments are here, my banks are here, my wealth manager is here, and I still have 10 apps between Coinbase, you know, into Money Farm, and then I have my own banking app, and then I have my alternative lending app like Lender Market or things for the alternatives ones, and maybe I have Kiva. You know, would it be nice to have a super app that condensates everything? But it's not just a matter of remembering a single password. It's all about getting a consolidated view of it, you know, instead of going. So it is too soon to say, but at the same time, you know, in Africa is a necessity. It's not a trend. It's a necessity because if you don't do this, you cannot build a ride-hailing app in Gabon. It's impossible. You will never have the critical mass. You might succeed in building a ride-hailing app in all the 200 million of Francophone Africa. Yes, you might succeed. But if you're smart, what you do is that you go to Gabon and you do a Gabonese super app that integrates the different pieces. And because there is a single money, because there is a single regulation, then you expand, but you expand with all the services at the same time. So it's the necessity, you know. Absolutely. I don't know if I'm answering that specific question on all the few, because, you know, I don't have a crystal ball, but I can observe what is happening right now, right? And I can say where I want to put my money, which is, you know, a good enough sort of witnessing of what I believe in it, right?
So Matteo right now is promoting for a marketplace for financial services, and he's just said that he's willing to invest in it and put his money there. So guys, you should be working on that and reaching out to Matteo.
There is more than that I'm interested in, but that would be a good start. Yeah, but you know, the few I know, they know that I'm putting my money there.
Great. That is very, very good. One question that we have in there. Okay, yeah, we've tackled it a little bit. Actually, the two parts of the question about the drivers of change. We touched based on the consumer needs evolution and change, and also the question is about the capabilities of the incumbent financial institutions that they should be building in order to play an effective role in driving that change in the financial industry and still reaping some benefit out of the evolution of the entire ecosystem. And that's a very interesting question as well. Who wishes to go first? Hafu, you haven't spoken in like 2 minutes.
Hello, can you hear me? There's a bit of a background noise now. Can you repeat the question?
You're breaking, Hafu.
Yeah, I think it would help if you could repeat the question. It wasn't super clear.
Okay, so we want to understand what are the drivers of change within the financial industry, and what are the capabilities that the incumbent financial institution need to build in order to continue to be part of that ecosystem and to reap some benefits out of it. What would make them competitive to the existing fintechs, insurtechs, and wow, a lot of work to be done.
Afu, I'm happy to leave you the floor.
So the question is around the barriers. Can you guys hear me better?
Yes. Yeah.
Okay, so it's more around what are the barriers, right? And I think we talked about that a bit. For me, it's more about the ecosystem. It's about the players and the incentive to really go for, you know, banking or fintech. Like, we need the structural component. And when we're even talking about technology, we also have to think about data speed, for example, like a simple thing like infrastructure. you still have like electricity outage here, like frequently. So there's some like structural components to it. And then the last is the incentive. Humans are structured in a way where if something is beneficial for them and it works for them, they will go for it without you even having to tell them, oh, go sign up for, bank, go create this account and, use Fintech. We are always looking for solutions that are affordable, that are convenient, because time is not a luxury. So anything that saves us time, that saves us energy, and that is cost efficient, we'll go for it. So we need some of these like structural elements to be in place. So like infrastructure, we need data that is like speedy and affordable, and then we need like apps, systems, or platform that will allow for some of these transactions to happen. And it's similar to some of these other networks that have worked in the past, right? So we have the example of like Amazon, Facebook, and stuff. The more people that own it, the more it's advantageous for us. If I know everybody else is like on PayPal, then I can pay anyone through the system. So whenever we do end up, having these local built platforms for us Africans, we need to make sure that we can all get on it. And that has to do with, I'm going to jump a bit to like the AFC, FTA, and how we need regional integration. Because although I mentioned that we have to customize to each one of the 54 countries, when you look at the population of some of these countries like Gabon with 2 million people, in terms of economies of scale, not much there, right? But if we can really have a regional integration when it's not just Gabon, it's Cameroon, it's all of the central countries. When you're talking about, Francophone West Africa, it's Cote d'Ivoire, it's Senegal, it's Burkina Faso, Mali, and all of these places, and you have more incentive to invest, there's economies of scale, there's more people on it, and then it's even make it more efficient because regardless of where you are, you can get and pay people through there. Hopefully my connection isn't too, can you guys hear me well?
Yes, we can. You're doing well. Sorry.
Okay, good.
Thank you very much. Sabnam, your 5 cents on that?
Sure. I mean, there were 2 parts of the question. So one was the drivers of change. And that, as said, it's the customer. So we have talked about it and stresses many. I mean, you cannot stress it enough because some financial institutions still are having a hard time getting it, but it's definitely the customer. Then the market and the technology. But what I find the more interesting part of the question is how can financial institutions keep up, right? How can they keep up? And like, what's their most important feature and what could they invest in? And the best thing that they can invest in is, I think, more important than technology is the culture for change, the culture for adaptation, because there will always be a next thing. And, if you would like to keep up and, stay in the loop, you just need to have a culture that is, flexible for changing. So you need to be able to integrate whatever is needed and just give the customer what's needed. Otherwise, you're just lost. But I mean, all the other aspects and components like technology and the customer demand is also important.
Thank you very much. Matteo, would you like to add to that?
So I've been trying to sort of wake up African banks since I was at Swift in 2009 and 10, when we started to do like the African conference with Tribe, and then since 2015 with the Media Network first, and then with the project we did with the Gates Foundation, and now with Bamboo. So I think that there is a little bit of not invented here syndrome in African banks. So there is this very hard acceptance that collaborating or listening to the entrepreneurs is the right thing to do. That's the first struggle. So of course, when you ask me what do they need to do to stay relevant, is to simply open up in a way that is a little bit more than simply, put a little logo in an incubator or an accelerator. No, it goes much deeper than that. And actually there is something, and it would be a very maybe smart conversation to have offline, hopefully with Afu as well, Because what I don't even understand is why they don't innovate with their client. So why is it that EcoBank doesn't call Total, for example, or like, I don't know, ABB or Ericsson, and they pick 2 or 3 challenges, and they take like the venture studio approach, where they invite entrepreneurs and they build like in a fast phase, the mother of the corporate innovation program sort of concept, right? Very simple. It exists for years already. Plenty of banks have done it with success. And it would be great because they will give a lot of confidence to investors to come. And I know that there are a few initiatives like this, so, but you know, they're still not visible enough. This is what we are trying to do actually with the FTS group. It's I'm hoping not only to be an investor, but also to be a connector between the corporates and the startups. And you know, most of the business cases have a financial inclusion / a financial angle anyway. And if it's not financial, is insurance. You know, think you know, agri-tech. You know, in the agri-tech space, how many super smart challenges you could make that involves both financial and insurance players, you know, and the technology of the brought by entrepreneurs. And you know, that's a space that needs profound renovation. So is mining, for example, to give you another example. But it is nothing that can be achieved by a single player, right? So I actually would be curious to see what, you know, because this is what in theory Hafu Deloitte could bet on, right, as a strategy. And you're coming from there, but you don't have a Deloitte hat anymore in Africa. So, and maybe you don't have it for a reason, but I'm sure that you're having this type of conversation. I would be interested in understanding what is the blocking factor. It is simply, I don't think it's a cultural thing, is that they try to put an ROI into that and they can't. And there is this sort of little leap of faith that is missing. But at the same time, this leap of faith has been functioning and proven model and having success stories in many other parts of the world. I don't see why is it so slow to take up.
No, I totally agree. Even when I don't have this Deloitte hat, you have all of these enterprises, and when they're here, they're only working with already successful companies that have already a proven model that can afford their fees and their processes, right? So there's no sense of like investing in innovation, investing in ideas, and supporting just like even random brainstorming, right? When we know that's what leads to the greatest innovation, like being able to support some ideas where, yeah, the ROI isn't there, you're not sure where it's going to go, but it's interesting and you think it can resolve a massive problem. And that's this lack of engagement and taking risk. And this is from all actors in the space. When you're thinking about investors, when you're thinking about banks, when you're thinking about, when they get here, they're looking for all type of insurance, they're looking for guarantees, they're looking for, you know, first loss, anything to mitigate the risk. When we know the higher the risk, the higher the rewards, right? That's like the most simple and basic concept of finance. But then when it's Africa, there's all type of barriers that emerge, cultural, language. And I'm like, but you are in China, you're in Mexico, you're in Latin America, you know? So why is it that we need so much insurance here? Because, you know, it's the future, you know, it's 1 billion people, it's young people, it's lots of problems to resolve. So yeah, definitely need to invest more.
Thank you very much. I mean, all of you, the input is wonderful. And I'm really happy that we've touched base on that, on innovation, whether it's open innovation and the engagement with the ecosystem or it's internal innovation. I'd love to refer to the technology as an enabler and a change driver, as Sebnem has mentioned. And we actually have a question in here related to how blockchain distributed ledger technology. I don't like the name blockchain, honestly. So how distributed ledger technology is actually influencing the financial service industry and the fintech environment in Africa. I mean, distributed ledger mainly eliminates the need for the mediator in the middle, killing the chance and the opportunity for banks and other financial service providers to make a cut out of guaranteeing safety or completion or whatever, mitigating the risk. So how does the distributed ledger technology affect and influence the current fintech environment in Africa? And while here, I would like to also touch base on the importance of digital identity as an infrastructure. I mean, Hafu a minute ago was talking about structural issues and work that needs to be done on infrastructure. I consider that infrastructure as well. What do you think? What's the impact of blockchain and how important is the digital identity that can be built, by the way, on a blockchain or a distributed ledger technology platform? How important is it facilitating and accelerating financial inclusion in Africa?
I think
Please go ahead.
I had the impression. Okay, well, I would say the short answer is very important because so I know there are these blockchain advocates that feel like blockchain will take over and massive, like have a massive destruction. I'm not one of these people, but I still believe in the power of blockchain and distributed ledger technology, especially in the areas of financial inclusion. So especially when there's a need to include an individual into traditional, like when the traditional financial system is pushing an individual out of the system, and it is harder to get this person inside. So like, I think blockchain is a great use case for these, creates very great use case for these kind of scenarios. And like you said, in digital identity sphere, with lending, like material touch, the agricultural space, like insurance and agri-tech space, there are a lot of opportunities for that. And I think Africa can present the great use cases, especially because of the regulations, because the tough thing about blockchain is integrating it into a stable like regulatory system, like the European system, for instance. And if you have like a blank canvas, a more developing, a more fluid system, I would say it would be easier, and it might be easier to carve the system from the scratch. So like regardless of its importance on like in developing like these interesting use cases for the ecosystem, local ecosystem, I think the potential to include it in the regulatory system in a seamless way without disturbing the status quo of the regulations is an important part of blockchain as well. And if you are not like Estonia, very agile, very structured, and you have a small ecosystem to deal with, then you need a system that is not so set on stone like Germany or France. And I think here we have the advantage to start relatively from the start and basically to integrate it in.
Well, Sabnam has frozen. Oh, okay.
Yes,
yeah, thank you very much. Matteo, your input on this and perhaps your closing remark as well.
So Africa is, some of the African countries are one of the pilots for, or the very early pilots for the central bank digital currencies, and actually a couple of them are in Francophone Africa, but that's not all. I mean, I'm a strong advocate for decentralized finance, and I believe that the ubiquitous way of investing that lending platform that have nothing to do with the territorial boundaries, currency boundaries, but they're only bounded by like a stable coin and this protocol that allows anyone to invest and anyone to borrow. It is a much lower barrier to entry to democratize access to finance. So and actually this is not only an African opportunity, is a global opportunity, but because Africa is actually doing their like next version of finance regulation as we speak, I think there is an enormous opportunity to ease the barrier to entries for these technologies to get in.
Thank you.
And of course, having like an e-franc CFA, as we got the digital euro right now, would be a tremendous opportunity, for example, for the Francophone Africa. And by the way, the challenge here is that we tend to talk about countries, but if we talk about regions in Africa, then you can have a semi-global approach, right? And Francophone Africa is a good example. Today is very complicated for someone in Mali to to crowdfund a loan in another country, because there are very few players that are present. You have to have a legal presence in every country and stuff like that. Someone could build up a decentralized platform in Dublin, and allow someone from Mali to lend money to someone in Gabon, and that would be not that complicated to build. The thing is that the moment a platform like this scales, it gets under the eyes of a regulator, and all of a sudden they say, wait a second, what is happening here? And this is where the problem starts, right? So I think my final remark would be that I actually see, because I am actively looking for deals right now. I see that things are moving towards the right directions. One, two, I see that the people that are really hands-on are willing to help, both in terms of giving back, made their experience outside and coming back into Africa to help locally, but also in terms of really smart money, getting into the continent. And by smart money, I mean people that used to be entrepreneurs that are really rolling up their sleeves and working together with them, not simply funding them. And I think we are on a up curve, or on a good curve in terms of having more and more innovation is not the right word. I want to say global solutions, with the customer at the center, digital global solution with the customer at the center.
Yeah. Okay. And cross borders.
And guys, apologize, but I have to leave a little bit earlier. So thank you.
Well.
It was a pleasure to share this panel with you.
Thank you so much, Matteo. I'll just
bye. Thank you very much. Speak soon. Bye.
I totally agree. Bye.
Bye.
Yes, so my last remark, because I also have to leave in 30 seconds, will be, I totally agree with Matteo. Not only do we need smart capital, we need also that capacity building component. So people that are willing to come back to the continent, work with the different players, and also help them scale. And how do we scale is also by providing the right type of capital, not just loan with exorbitant rates, but equity, smart equity, guarantees, and all of those elements are important. And then innovation is key. We need to invest in innovation, and it needs to be for the public good. It can be on a one-time basis just to generate revenue. So those will be my last remarks. Thank you so much for the opportunity. It was very great meeting you, Noah, Semnen, and everyone else that joined us, and thank you very much. Bye.
Thank you, Hafu, for being here. It was a pleasure having you. Sebnem, last but not least, what are you?
Well, the panel is all mine now.
All mine. Yeah.
Yeah. Well, I mean, I cannot add more to what Hafu and Matteo said from an investment point of view. So I would like to focus more on the business development side. So there, I see when I work with local startups, there are a lot of entrepreneurs that have the enthusiasm, that have the inspiration, but not the right ideas, or not the right ideas for now. So I would advise these entrepreneurs to not lose their enthusiasm, but instead focus a bit more on other environments, because the best kind of entrepreneurship is the one without borders, is the one that combines different skill sets, combines different know-how from different ecosystems. And there are many programs nowadays. I mean, unlike their predecessors, they have the opportunity to access many programs, like this LOFT program that I mentioned, or there's HOLT Accelerator from Canada, or there are many in US. Many universities have these kind of programs that allow entrepreneurs to develop their ideas, scale, and even invest in them. So I mean, just take the leap. If you believe in yourself, just take the leap. Take a look at these programs. Don't be scared, and then you can come back with with enhanced knowledge, with more inspiration and more maybe better ideas, and so better, because many of the very brilliant African entrepreneurs that I've seen are also not working from the ecosystem, but have like these remote teams and different setups. So just don't be afraid to explore different options and alternatives.
Yes, and if they wish to be entrepreneurs and to build a startup, they can always go for hackathons, where there are problem statements that are delivered by certain companies and businesses, and this can give them ideas on what to build and how to build it. Thank you very much, Sebnem, for being here. Thank you for the valuable input. We have taken a look at the Fintech ecosystem in Africa, the opportunities that are there, the challenges, the technologies that are enabling that, the role of the ecosystem itself, all players in it. How can we push it forward, accelerate it in order to serve financial inclusion, in order to serve the growth of startups, and in order to help SMEs to scale and go across border as well. We've touched on capacity building, we've touched on investment. I believe that was a very comprehensive panel. I hope you have enjoyed the time as much as I personally enjoyed, and I hope that our panelists as well have enjoyed it. My name is Noha Shakir. I'm the Secretary General of the Egyptian Fintech Association. I'm Vice President of the Africa Fintech Network. Please reach out if you have any questions or you need any help or support. Thank you very much for having me, Stanislava. Wonderful audience. Thank you for being part of this panel, and I hope to see you all soon. Thank you very much, ladies.
Thank you, Noha. Thank you, Stanislava.
I want to thank all of you. It was a great panel. All of you was great. The points and the opinions you share was perfect. And to our attendance, our delegates, I want to thank to you also, and to tell you tomorrow we also have 2 panels. It starts at 10 a.m. GMT, so we're going to wait for you again. Thank you and have a great day. If someone has questions, you can direct them in the LinkedIn group that I shared before, and all of the panelists, all of the speakers are members of this group, and they're going to answer you. Thank you very much again.
Bye. Bye-bye.
Thank you.